Hello, this is Ken Lane with Center Square Asset Management. The Federal Reserve is currently debating whether or not to begin raising interest rates from their historically low levels. And naturally, many investors in bond mutual funds are concerned about the impact rising interest rates might have on their bond mutual fund, as bond prices tend to fall when interest rates begin rising. If you're one of those concerned investors, there's a simple two-step process you can use to determine your approximate downside risk in a rising interest rate environment. Step one would be to go to Morningstar.com and in the search box at the top, punch in your mutual fund symbol. When the profile appears, on the right-hand side of the screen, approximately 1/4 of the way down, you'll see a section marked Credit Quality/Interest Rate Sensitivity. If that indicates your fund sensitivity and credit quality is moderate or high, then chances are some concern about the impact of rising interest rates on your investments is warranted. Step two would be to contact the mutual fund company directly or locate their most recent mutual fund fact sheet. They tend to come out quarterly, and get the average duration of the bonds in the portfolio. Not the average maturity, but the average duration. Those are two different things. Once you get the duration, you can simply multiply it by a hypothetical rise in interest rates to determine your potential downside risk in that scenario. So if you want to see how your fund might do if interest rates were to rise, say 4%, if the average duration of the bonds in your fund are 5 years and interest rates rise 4%, 5 times 4 is 20%, meaning the approximate downside risk on your mutual fund is 20%. Now take that with a grain of salt. Investments tend to be forward-looking, bonds included. So if the market is anticipating interest rates will be rising, to some degree that'll already be factored into the fund price and the bond prices as well. But nonetheless, by doing that simple calculation, it'll give you a rough estimate of your potential downside risk should interest rates rise 0.5%, 2%, 5%, whatever. If you're still concerned or you have additional questions or you'd like to meet with us to discuss your funds and your investments in more detail and get a more detailed analysis of where you stand and what your potential risk might be, call Ken and Deb Lane at Center Square Asset Management at 518-477-5468 or 800-630-9313. Thank you.